Hello and welcome to another video on accounting. In this video, we will start talking about accounting cycle and we will discuss the first step in the accounting cycle, analyzing and journalizing transactions. So what's an accounting cycle? An accounting cycle is steps that are followed by accountants to prepare financial statements. There are 8 steps in this cycle. Now we will be talking about the first step, and in our other videos we will be talking about other steps, other 7 steps. So the steps that we will be looking at in this video is analyzing and journalizing transactions. Now before I go to journalizing transactions, I will walk you through how a transaction happens and what is the process of a transaction. So a transaction happens. That transaction produces a source document, and the source document is analyzed by the accountant, and then finally accountant will record that in accounting system. So let's talk about each of these steps in accounting process for the transaction to help us understand what they are. So the first step is the transaction. So what's the transaction? Transaction is an exchange of things of value between two parties. When two persons, two businesses exchange things of value, we call that a transaction. For example, if you go to Walmart and purchase a toothpaste and give them $5, a transaction between you and Walmart has occurred. Why? Because both of you have exchanged things of value. You gave Walmart money, cash, and Walmart in return gave you a product, toothpaste, which is something of value to you. Now, this exchange can involve services. For example, if you pay your phone company, now the phone company will get cash, something of value, and the phone company will give you a service, phone service, which is something of value to you. Now, the transaction can happen with people inside the business. We call that internal transactions, such as transactions with employees. And it can be with outside people, which is external transactions, such as buying from suppliers. Now let's look at the source documents. Remember that every transaction must produce a source document. So when you bought something from Walmart, now Walmart gave you a slip or a receipt. Now that is a source document for you. Similarly, there could be invoices, bank statement, check stubs, and other contractual documentation can all be source documents that will show that a transaction has occurred. Now, these source documents are analyzed by the accountant to understand the effect of this transaction on 5 things. So the accountant will be looking at whether these 5 things increased or decreased. So as a result of the transaction, did assets increase, decrease, liabilities, capital, revenue, and expenses increased or decreased? Now, then the accountant will have to record that. So recording is the step that we will be focusing on. So by analyzing the source document, the accountant will then record the transaction in the journal using debit and credit rules. Now the rules are that assets and expense increase will be debited and a decrease will be credited. For example, when you bought something from Walmart, the toothpaste, you gave Walmart cash. So cash is an asset for Walmart. It increased, it will debit the asset. Since it gave you a product, that product is also something of value, which is an asset. So that product decreased with Walmart, it will credit asset in calling it inventory. So assets expenses increase are debited, decreases are credited. Revenue, capital, and liability rules are the opposite of assets and expense. So increase will be credited and decrease will be debited. We will practice transactions to show you how a journal entry is made using debit credit rules. So these rules are very important. You need to understand them. And now we will apply these into transactions so that so that we can illustrate how it works. So this is how a journal works or looks like. Now a journal has four columns. There is a column for date. Now every source document will have a date on it, so you're going to put the date there. There will be a column for accounts. Here you have to put the titles of the accounts. So out of those five things, what are the specific things, specific names of the accounts involved? You'll put them in here. We always start with the debit line first, and then we'll put the credit line the next. There is a column for debit amount and a column for a credit amount. So this is how a journal looks. And now we will be continuing with some examples to make journal entries. Now I will give you a statement just like on the top and show you visually how this transaction is so that it helps you understand what increased and decreased. Mark Hayden is the owner of the business. He is a lawyer, so he opened image law business. Now look what happened. Now Mark Hayden gave the image law business his own personal money, $80,000. Now this is what visually a transaction happened. But in exam settings, you will be given a statement for this visual transaction, which looks like the one above. When you read this statement, Mark Hayden invested $80,000 to start a law firm called Image Law. You should be looking for the key words to find whether assets, expenses, liabilities, revenue, or capitals are involved, and whether they increased or decreased. These are the two things you need to look for in the analysis stage. So look for what are the accounts involved and whether they increased or decreased. And then apply the rules of debit and credit to increase and decrease. So if I read that statement, I'll be looking at the key word. Now the key word for me here is investment by Mark Hayden. So when the owner invests money in the business, this becomes capital and the capital of the business increases. So that's the keyword. The other keyword is that the owner gave the business cash. So cash increased with the business. Now cash is an asset, increase in asset. So what happened is capital increased and cash increased. So now we understood and found out the accounts involved and found out the increase and decreases. Now we need to apply the debit credit rules. So a capital increase is credit and an asset increase is debit. That we need to put in a journal. So the journal will look like this, starting with the date, and the first line will be for the debit. Since cash increased, we are going to put cash here. Remember, cash is an asset, so we are not going to put the name asset here. We will use specific names of accounts. So cash will be debited $80,000 in the debit column. And then on the next line, which will be a credit line, you need to put the credit name, account name, which is capital of Mark Hayden, and that is 80,000 there. So remember, there will be a line for debit, there will be a line for credit. You cannot have two debits, you cannot have two credits only. You must have a debit and a credit. And also the amounts must be the same, 80,000 on the debit side, 80,000 on the credit side. Let's look at transaction 2. So that's a statement on the top and showing you visually here. So here's Kathy, the landlord, and Image Log gave Kathy $12,000. And Kathy says, got the cash. Now, Image Law, you can use the office space for 6 months. So now, I hope you understood what this transaction happened. In a statement, it will look like the one on the top. Image rents an office paying $12,000 for 6 months in advance. Now, you should look for keywords. The keywords could be any of the words that are help you understand what accounts are involved. So again, we'll be answering two questions. What are the accounts involved out of the five? And whether they increased or decreased. And then third thing, when we understood the increase and decrease, we will apply the rules of debit and credit. So renting an office means that it is rent. But since we paid for it in advance and we haven't used it, it becomes a prepaid rent. And prepaid rent is an asset for the business. The word paying indicates that cash will be down with image law, it will decrease. So cash is an asset, the asset decreased. So we found out that prepaid, which is an asset, increase. Now asset increase will be debited. Cash, which is an asset, it decreased, and asset decrease will be credited. So let's write this in the journal, and this is how the journal will look like. Prepaid rent debit 12,000, cash credit 12,000. Let's look at the third transaction. So that's the statement on the top. We will come to it shortly, but let's look at the visual transaction. Here is the supplier sending goods or furniture to Image Law. So Image Law, take the goods. I will email you the invoice, says Ted Decor. So now we need to look at the transaction on the top, on the statement on the top, and analyze it to find out the answer to two questions. What are the accounts involved and whether those accounts increased or decreased? So office furniture. Furniture is an asset for the business, so we know asset is involved. And the second word that is important here is on account. Now, when you buy something on account, you are not paying for that on the spot. You will pay for it later. So that creates for you an account to pay later, and we call that accounts payable. So TID Decor becomes an accounts to pay for by image law. So it's an accounts payable. An accounts payable is liability. So we understood that the accounts involved are furniture, which increased, and accounts payable, which is a liability, also increased. So let's apply the debit credit rules. Now furniture, an asset increase will be debited, and accounts payable is a liability, so it will be credited. So once you find the one line, a debit or a credit, so if you find a debit line, then that means the next item will be credited. So if you find a credit line, suppose you are very good at spotting the credit lines first, now that means the other thing will be debited. So let's look at that in the journal. So January 3rd, furniture will be 4,900 debited, accounts payable will be 4,900 credited. Let's look at another transaction. So here is a customer. We are going to do a sales transaction. So Image Law gave legal services to Capping Auto, and Capping Auto in return gave the business $3,100. So I hope you understood what happened, but looking at the statement on the top, it says provided legal services to Capping Auto Co. for $3,100 cash. Now, keywords for me would be providing legal service is what the image law earns revenue from. So this is revenue. And receiving the cash means it's cash. So we identified that revenue and asset cash is involved. Now we need to look at whether they increased or decreased. So when you provide a service, that is your sales of services increase, it and sales of services is credit. Since the business got the cash increase, which is an asset increase will be debited. So the journal will look like this. Always starting with the cash, with the debit line first. So cash debit $3,100, and we will call this legal fees revenue $3,100 credit. Let's look at the fifth transaction. That's the statement, and the visual is here. Image Law is calling the bank for a loan. Can I borrow $25,000? The bank says, sure, you are a good client. Let me transfer it to you. So it transferred $25,000 to the bank account of Image Law. Now, hopefully you understood that Image Law got $25,000 cash. And this came from the bank in the form of a loan, and loan is liability. But if you analyze the statement on the top, you can see that borrowing means it is a loan, and $25,000 is received because of the loan, so it's cash. Now we identified that loan liability is involved and cash, which is an asset, is involved. Now receiving cash will increase cash, and the liabilities of the business in the form of bank loan will increase also. Let's apply the debit credit rules. So a loan increase, a liability increase is credit, and a cash increase or asset increase is debit. So we always write the debit line first: cash 25,000 debit, bank loan 25,000 credit. Looking at the sixth transaction, so here is Ted Decor. I hope you remember we Image Law purchased something from this supplier and did not pay him on the spot. Now he is asking for payment. So Image Law will now send him the money, $4,500. Now, so I hope you understood that Ted Decor was an accounts to pay, or was an accounts payable, and so accounts payable is involved. And since Image Law gave him cash, cash is involved. But you can read the statement on the top to analyze the statement like that. So we already know that cash is involved and accounts payable are involved. Now cash will decrease because Image Law paid it, and the liabilities of accounts payable will also decrease because now Image Law has no more accounts to pay. So that decreased. Now a cash asset decrease is credit in accounts payable. So now we found out the credit. That means the next line is a debit. But applying the rule would be accounts payable liability decrease is a debit. So we always write the debit line first: accounts payable 4,900 debit, cash will be credited $4,900. So a couple of more transactions. So here is office clerk. Susanna is the office clerk, and she wants to get paid for the services that she gave to Image Law. So now Image Law will pay her. So now, so you hopefully you understood what accounts are involved. Now that is an internal transaction which is paying employees. Paying employees involves salaries, and salaries is an expense. So expense is involved, and since Image Law gave cash, so cash is involved, and it decreased by giving it to Susanna. So the key word for us would be paid, which indicates cash decreased. And the other keyword is paying employees bi-weekly pay. That means the salary. So salaries is an expense and cash is an asset. So we identified the accounts involved, and we also identified whether they increased or decreased. Since we paid, cash is decreased and that will be credited. That means the next line is a debit. We just have to find the name for it, but salary is expense. But to apply the rules, expenses increase will be debited. That is the journal. Now, Nature First is a client. So Image Law gives legal services to this client, and a day later sends the invoice. And the statement on the top looks like that. So it billed Nature First $5,800 net 30 days for contract preparation and registration. So now, but if you looked at visually, Image Law gave a legal service to the Nature First client. So giving legal service is what the business earns revenue from. So it's revenue involved. Since um, it Image Law gave 30 days to the customer to pay, now Image Law has an accounts to receive from Nature First. Accounts received means money to receive from Nature First. We call that account receivable. Account receivable is an asset, and that increases because of revenue. So the two accounts involved are accounts receivable and asset that increased, and providing legal services will increase revenue as well. So assets increase will be debited in the form of account receivable, and revenue increase will be credited in the form of legal fees revenue. So the ninth transaction involves this. Now Tupu sends us an invoice, and we as Image Law sent $300. So the transaction is put into words like on the top. Paid vehicle insurance expense for the month was $300. So the keyword is paid. Paid means cash is involved and cash decreased. And expense, the word expense should tell you an expense is involved and an expense increase because we use vehicle insurance service. So we know that these two accounts are involved, and paying cash means asset decrease, it will be credited. So now that we know the credit line, the opposite line is a debit, which would be insurance expense. But applying the rule, increase in expenses are always debit. So insurance expense $300 debit, cash will be credited. Here's a Canada Revenue Agency example. So they send you a quarterly tax statement to MH Law, and the statement is put into words on the top. So taxes to pay at the end of the quarter are $250. Now let's look at the keywords. The keyword for me would be taxes. Now taxes are an expense for the business, so expenses involved, and we are going to pay it at the end of the quarter. We are not paying it now, so that makes it an account to pay. So we can either use the word accounts payable, account to pay, but since accounts payable is more for buying from suppliers, so this is Canada Revenue Agency is not our supplier, so we will use the word instead of accounts payable, tax payable. So we have expense involved and liability involved. An expense has increased, it will be debited. Liabilities increase, will be credited. All right, so now the second last transaction, Nature First. If you remember, MH Law sold a service to Nature First and gave them 30 days to pay. So they are an accounts to receive for MH Law, or accounts receivable. So now MH Law is paying. So it sent $5,800 to MH Law. And those are the words on the top. So you can understand that cash is involved because MH Law got the cash and it increased. And it got the cash from an accounts to receive. So now the accounts receivable is gone, finished, because we don't have any more accounts to receive. So reading the sentence on the top, well, you look for the keywords. Receiving $5,800 means cash increased, and this cash came because a customer was our receivable. So we have cash and accounts receivable involved. Cash increase, it will be debited. That means the other line will be credit, but with the other line is account receivable decrease is credit. All right, the final transaction is this. So now the owner, Mark Hayden, went shopping and bought himself something, but paid with the company debit card. So he used company debit card to buy something for himself. We call this drawings. So whenever owner takes cash for business use or buy something personal with the company credit debit card, now we call that drawing. And that means cash will also decrease if you use a debit card. So the accounts involved would be cash in drawings. So drawings increased because the owner did some took money for personal use. We will debit that, and cash decreased, so we will credit that. Now these are the journal entries. Um, the journal entries can be best learned if you practice more and more, and watch the video one more time so that you understand how debits credit work. And don't forget to like, subscribe, and click the notification icon so that you are notified of the future videos. I will see you in the next video.